A esta segunda jornada de la 19ª ya.
Welcome to this second day of the 19th Medcap Forum. It's a pleasure to have with us today, and for those following on, both for those following online and the attendees here today, and I would like to thank the people joining us online. Anyway, it's our pleasure to have Montserrat Martínez Parera, Vice Chair of the CNMV, the Spanish Stock Market National Commission. Her trajectory both in the public and the private sector that Montserrat has is really broad. I mean, she's very young. I didn't want to say otherwise, but it's true that her role is fundamental in institutions, not only in Spain, where apart from the CNMV, I mean, she's working in the Spanish Bank Board, but also in European institutions. Up to some days ago, she was chairing for 2 years the Committee of Sustainability in ESMA. Also, she has intervened in other committees and international organizations. So I think she's the perfect person to join us today before the first panel, which will start right after her intervention. And it's precisely about a topic that is key. I'm sure that you all agree on the importance of sustainability. Anyway, thank you so much, Montserrat, for being with us here today. You have the floor. Good morning. Thank you, Jesus, for your invitation, for your introduction. I am delighted to be here in this forum. I've also had the chance before I came here to see everything around, everything revolving around the event, the conferences. I think it's really positive that BME is organizing this platform, allowing companies to get in touch, companies looking for investors and investors. These fora are necessary. Congratulations again, I'm delighted to be here. Anyway, looking at figures of our market, specifically BME growth, thinking about the alternatives market, I think we can say that we're doing relatively well. We're talking about a market that since its start in 2008 has never stopped growing. Yes, there's been better and worse years, but it's been constantly growing. We have around 135 listed companies in BME growth, some of which are in expansion, some of them are real estate investment trusts. They are managing significant figures and they are present in sectors that are key for the economy in terms of the growth of our country. I'm talking about renewable energies, tech, and others. Having said this, we might ask ourselves, is this enough? What assessment can we make? I mean, supervisors too. What elements can we change or improve? The first reflection I have is that we should emphasize that we have to be very proud because we have an alternatives market that is very robust in Spain, and how they are allowing companies to gain access to financing sources in multilateral trading platforms. This is a complex moment. As you know, the volume of IPOs is almost zero. So having said this, we should, and it's our duty to aspire to analyze and to always have that critical vision so that we see points to improve. Why? For different reasons. We say this in many fora, but we can never state it enough. We know for sure that a market that has medium and small cap companies benefits the economy, the social and financial progress, it increases access to financing, the reallocation of assets of resources is more appealing, and you're benefiting investors by giving them more opportunities. This is precisely important in Spain, not only in Europe, where it's also the case, but our business fabric contains companies that are overall small in size. We've got an important volume of SMEs. This implies a bigger reliance on bank financing, which is not wrong. I mean, bank financing is perfectly fine, but we know that the more options you've got to finance your company, the better. We've seen it in recent times. There's been an increase of the cost of financing options. There's a big intensity in the rise of interest rates, and the increase of rates in the part of issuances and anything related to interest rates is bigger than the cost of equity. So there are diversification options, and it's got interesting alternatives. On the other hand, the panel after my intervention will talk about the disruptive changes and huge challenges that we are going to face, requiring us to get involved in tech and sustainability, and requiring other duties and adaptation of the business model and the growth of our companies, requiring investors, funds. We see this reality. It's very clear from the tech side, what you can apply of AI, related to AI in different fields, but this all requires funds, money. We know it well. So I'm talking about different elements, but I wanted to start with this remark. It's key that we keep betting on the development of alternatives markets that are designed specifically for the benefit of SMEs, for medium and small cap companies in the Spanish Stock Market National Commission. That's the way we've done it for a while. Jesus knows it well. And allow me to highlight the value of the work we've done in this sense. Clearly, one of our 5 strategic lines in our action plan that has just been published a month ago says, and I quote, one of the strategic lines is to revitalize capital markets to boost growth and a transition towards a sustainable economy. And from then onwards, there's a development of a series of initiatives. This is not new by any means. We said this before. It was in our previous action plan, and the Spanish Stock Market National Commission as an institution has always supported the development of the market and giving access to financing sources in the market for our companies. We have developed many initiatives. We have shortened the deadlines and the time it takes to do certain operations and take certain steps. We are the consultants of the government. We have proposed a reduction of the CNMV's supervision rate to moderate associated costs. We have also proposed to alleviate execution times for primary market operations, everything that can help and make things easier for companies. We define measures that will make operations more agile and put Spain up there with other countries in terms of the best standards we see in our environment, in our continent as well. We've also carried out dissemination activities together with BME. We have held several conferences and days so that we can talk about anything relevant when it comes to going public, and something that is not very common for supervisors. We have opened up a consultation channel for companies and shareholders who want to know about the requirements to go public. We are committed to enhance our capitals markets, but we are supervisors. We have to monitor. We need to boost, to enhance the development of markets, but we at the same time make sure that there's an appropriate supervision of its performance. I wanted to highlight that in the case of alternatives market, supervision is closer. This is the case for BME Growth and other platforms. Our tasks, we actually have fewer tasks to do. Our priority as a supervisor is to guarantee that information in the markets is related to, it complies with the Market Abuse Act. We don't want manipulations of prices, to avoid conflicts of interest, cases of corruption. That is our main priority. We're not there reviewing companies directly as we do in the regulated market. We don't look at the financial accounts filed by the companies, but there is some difference then between the alternatives and the regulated market. It's important to be clear to our investors. Alternatives markets are obviously less regulated, as I was saying, less supervised compared to stock markets. So of course there are additional risks that can happen. In exchange, this has a lower cost for companies, and it offers opportunities for investors to invest in interesting projects that, if successful, can truly become amazing opportunities and be really appealing for them. Anyway, it's very important to understand the traits and personality of the alternatives markets. They offer very specific risks and opportunities, and this is something that I wanted to highlight. Having said this, and as I was mentioning at the start, everything that has to do with boosting, encouraging the development of these markets, something we do with all the initiatives we launch, and it fits really well with the European initiative by the European Commission. I don't know if you remember, but yesterday you heard from the European Commission, and we heard about something that is going to be debated during Spain's chairmanship of the European Commission to boost the development of markets. I'm not going to dwell on this. You've got to the topic before, but I wanted to highlight one of its main elements. It's about increasing the threshold, the capitalization thresholds under which the unbundling rules and standards, the costs of analysis and execution would not be applicable. This might boost more recommendations for investors about listed companies in these kinds of markets. So we are moving forward in the right direction. Having said this, what elements can we think of where we might need, or it might be convenient to supervise a bit more or think about a bit more? For instance, it could be positive to reflect on the mechanisms to go public, to get listed. Once you are in BME growth, what is the mechanism to go public? Because in some occasions, as we see now, there's a duty if capitalization gets to 1 billion, that it might be a bit too rigid, not very flexible. So I think it would be interesting to reflect on this matter. On the other hand, we can talk about liquidity. Liquidity is undoubtedly an issue we should focus our attention on. Some securities have, some assets have a certain liquidity, but an alternatives market doesn't have as much liquidity as a primary market. So this is the case just because of the personality, the nature of the market itself, and this may have implications when it comes to the establishment of prices, making it easier for investors to get in at specific times. At specific times, any initiative encouraging or increasing liquidity is something we should be willing to implement because it will benefit all the participants of this market. It's about promoting a higher investor demand and at the same time making it easier to get transparency, information, analysis on these companies. For instance, institutional investors might be the most appropriate, the most suitable to access these kinds of assets and products. Yes, we can create mechanisms or design vehicles with a maybe monthly or quarterly liquidity that corresponds to the liquidity of underlying investments, so that we can balance out the liquidity problem. I think we need to boost this, to encourage this, because it will lead to a more liquid market. Anyway, just to finish with, the alternatives market is a key part of our economic and social development and progress, as I was saying at the beginning. It allows companies to grow in size. It's like helping companies to speed up their growth. It's a platform from which companies get in touch with investors, with the markets. They understand the market better and they become more professional and benefit from its many advantages. We can see many success stories of companies from BME Growth who've gone public, like Green Energy, Atris, MásMóvil. So it is an important channel for them. The Spanish market is robust. It's got important leading companies in it in their respective fields, and forecasts are very positive, as I was saying. If we take into account that we are one of the economies with more SMEs in its business fabric, we understand there's a huge plethora of companies with that capacity to benefit from increasing their options to access financing sources. We've seen it in Scandinavian countries. In the UK, there are many success stories that we should aspire to. We need to make the most of our margin, stay open-minded about elements such as the ones I've mentioned already, to introduce and to be very proactive, to launch, to implement improvements, to encourage, to move the sector forward. Again, thank you for your invitation and congratulations on the conference. My past has involved the relationship with investors, so I understand and I recognize the value and importance of fora such as Medcap, just to carry out networking activities, to get people in touch. And I'm also sure that you will enjoy the following panel a lot, with talking about sustainability reporting, one of the key elements that I was highlighting before. It's a duty and a challenge that all companies will have to face. Thank you very much.
Yo creo que nos hemos puesto ya. Bueno, buenos días a todos.
Good morning, Montserrat. Thank you so much for the introduction of our panel. Thank you to all the attendees and welcome to a wonderfully fun panel, which is about standards, regulation and reporting of sustainability information for issuers and investors. Wonderful to start the morning with such a light topic. We are in the European Union, which is the market with the financial regulations framework about ESG that is most developed in the world. We've got MiFID II, the Sustainable Finances Dissemination Act, we've got taxonomy, the EU taxonomy. Anyway, we have a lot of content to spend a whole day talking about this, but we won't. Before we start, let's highlight the role of BME, highlighting putting sustainability in this under the spotlight and promoting financial education through the BME institution, and to providing products related to sustainabilities like its indices and bonds. Together with BME, we are committed with sustainability, in this case with the environment specifically. In this forum, we would like to look at the carbon footprint of these 3 days of a conference, and this way we can research and analyze and basically launch a plan to reduce that carbon footprint gradually. Of course, what we can't mitigate, we will compensate with other science-based projects, always linked to the BME strategy. With this, I would like to tell you, behind your credentials sheet, there's a QR code. Surprise! It's a short survey to help us analyze better the journeys, trajectories, and emissions that will make up the carbon footprint of this conference. You might have seen in the one-on-ones and in the entrance hall there are sensors in the bin so that we can analyze the sort of waste we are disposing of. We are very lucky to have a very varied representation in this panel. Let's start with Jose Miguel Tudela, who's a Climate Action and Sustainability Director at Enagas, coordinating the engagement on one initiative with investors and stakeholders with regards to sustainability. He's also the Mafro Gas, the European Association of Natural Gas board member. And then we've also got Alberto Gomez Reino. For more than 20 years he's been in the investors field, and now he's in charge of sustainable investment and institutional asset allocations at BBVA, and he wants to help implement the sustainability strategy in the whole territory. Anais, it's a bit hard for me to say your surname. Is it Lavigne? Senior Associate Client Relations at Morningstar Sustainalytics, covering the Iberian market. Apart from supporting financial institutions in different fields of the European market, she's also providing international relations and analysis about ESG. And then we've got Adolfo Estevez, Managing Director at EthiFinance Ratings. You've been there for 12 years. EthiFinance Ratings comes from the merging between Assex Rating and EthiFinance. And previously you were in General Electrics, working on private equity and insurance. With this, I would like to start with the first question. It's a very obvious one, easy one. How have you adapted to a context of changing regulations from the point of view of issuers, investors, service providers? Jose Miguel, would you like me to start with you? Thank you very much. Thank you for your invitation. On behalf of Enagas, we would like to exchange and to share our humble experience. It's about forecasting, anticipating. If we look at our perspectives, I think that the key in this regulations framework that is so fundamental, so critical, and that you were presenting, it's all about anticipating changes. There's an Act 11/2018 about the dissemination of information on sustainability. What is most important for us, what was more important for us, was to anticipate the topic. We had certain sustainability content and standards. Yes, we have to follow such and such standard. For 10 years, we had been using the same annual reporting standard, so we made a huge progress before the regulations forced us to, in terms of ratings and yearly reports. For 7 years, we had done this in the first quarter. Same thing happens with approvals of the board, involvement of the board. It's always that way. We had the approval of the board of this report, so regulations and standards never caught us by surprise. What I want to say with this is, how do we try to forecast, to anticipate what is ahead of us? There are 3 levels for us to anticipate. At European level, we have tried to get involved in all the debates about the development of directives as a company, but also in terms of associations. This is very important. We have a huge power that we can develop, in our case, through Mercados, the European Association, Gas Association. We try to provide input and comments. When it comes to the Spanish level, we are providing input as well for the new directive about financial information as a company, and again using our association to provide input, provide remarks. And this is important, but I want to make it clear that for us it is even more of a priority, not only the consultations and comments, but also the regulations.
Estándares que nos vamos a enfrentar.
The analysis that we are going to face is key, and it is to continue preparing the information so that we can then file those reports. What is key for this is to work in advance. We have applied anticipation. We don't want to be in every fora, but we have to analyze the key standards, and we have to have prepared beforehand when it comes to reporting on sustainability, when the regulation is implemented. And from the point of view of a manager, how do you look at it? Well, in our case, the action plan on sustainable finance of the European Union, which is much wider than the regulation, classifies economic activities, disclosure, which is a very relevant element because we are the managing entity. We have to provide transparency to our investors. We need to explain what is our approach on sustainability, both as a manager but also as in terms of the product. So it has entailed a huge transformation more than an adaptation. Any managing authority at European level is doing many more things than we used to do 2 years ago. In our particular case, apart from the regulatory perspective, we also have two additional trends that have made this transformation even more relevant. On the one hand, sustainability became one of the fundamental pillars of the BBVA group, and also in terms of asset management, in 2019 we launched a global sustainability plan to be integrated into every activity in every geographical area where we are present. So that has meant for us training dedicated teams to sustainability, investment in risks, reinforce compliance areas, product areas, reporting areas. So as a general rule, I can say that it is a huge transformation of the institution, and where a few years ago we could say that sustainable investment was a thematic field and you could be a niche specialist, now it is cross-sectional to the organization, and that entails a change in a shift in paradigm. We need, of course, to provide data to the managers to respond to the European regulations that you have just mentioned. So we had to also anticipate, and we had to adapt to regulatory changes and to the new regulatory framework that we have just known. In order to respond to the SFRD regulation, we needed to develop the PI data for the taxonomy. We needed to implement some changes, and we also had to make estimates before we obtain data from companies. We need to use estimates, and we of course had to adapt along the way because we needed to guarantee a certain degree of homogeneity of data, and that was a challenge for all of us. And above all, in order to harmonize the approach, because of course we are a data supplier that historically has its headquarters in Amsterdam. The parent company is in Amsterdam, so we needed to respond to the European regulation, and we needed to provide data to our investors and customers. So we had lots of data available at hand, and that helped us build the indicators with those available data. We also had engagement solutions that have helped a lot, but we also needed to create a dedicated team. And in Sustainalytics, we have 2,000 people. More than half our employees are analysts. And in order to answer the action plan initiative, we needed to put together a team of 150 people that are either experts in European regulation or analysts or developers of IT systems, in order to provide reporting solutions and to facilitate the work that many of those here attending this conference will have had to do the reporting, the whole reporting. And I would like to take advantage of the opportunity to congratulate you because you needed to adapt. It's been a very difficult task, and it's entailed a great effort on the part of the small and medium-sized investors. Yes, we all have to adapt along the way the resources that we have to face that regulation. And what about you? Well, the first thing that I wanted to say is that all these pieces of regulation have a clear goal, which is to provide sustainability and place sustainability at the heart of the European financial system. So we need to transform that system towards sustainability. From my point of view, there are two rules or two main standards. One is SFDR, which focuses on the financing sources, the providers of funding, and what they are requiring, what the market is requiring, is a set of things. One would be that funds include sustainability policies. It doesn't mean that all funds have to be sustainable, but they need to have a sustainability policy incorporated into their day-to-day. Secondly, transparency in the application of those policies. And third, to disclose the impact of their investments in sustainability. That provides transparency. That's why it is important, and so the investors can decide where they want to place their money. And then, additionally, those standards from an environmental and social point of view, they are incorporating a concept which is to do not significant harm. And what that means is that investments shouldn't have that type of impact. And then, apart from the SFDR, something that was added this year, there are 16 concepts that are called main adverse impacts, and it means that when you make an investment, you have to bear in mind whether that has an impact on biodiversity, water, waste, or social aspects. And that is very important, and since it is touching the sources of financing, it will transform companies. And then we have the enterprises and the companies themselves, and that is where the CSRD has an impact. That is a standard that is going to force companies to report on sustainability. But the problem arises that in the end, the SFRD have arrived before the CSRD, which is the one that is asking the company for the data. And the previous one is the one that tells them how to collect those data. So there's a problem there in the timing. But the main problem or the main shift is that giving data or reporting in data was something that people did almost voluntarily. It was a non-financial report. It was like an advertising campaign. What am I doing? I'm giving money to NGOs, and that is becoming much more serious. It is a report that has to provide very specific data that has to be signed by some executives of the company, and hence that is going to change the market altogether. From the point of view of sustainability agency or ESG agency, what are the difficulties? As Anais said, the main challenge is to collect those data from the for the investors. Companies do not have those data available. Many of them do not report those data, and so you have to get in touch with them and engage with them. So it is a question of sending questionnaires, which is always cumbersome for enterprises. And some companies don't even have data about biodiversity. For example, we are in the sector and we know what biodiversity is all about, but an average company has no idea at all. And that requires you to resort to models that are the most sophisticated ones to collect data about CO2, biodiversity, temperature increase, and so on and so forth. And another problem that we encounter is a lack of standardization. when you are collecting data from companies, and some companies give some data about ESG, some others give some other data. The models are very diverse, and in the end, you end up with that criticism in the market. In the rating sector, ratings are very aligned. In the world of ESG, there is a lot of disparity, and that might generate greenwashing problems because the investor can use the data that is more convenient for them. And then to close my first intervention, I would say that another problem is that since there is a new sector, there are hundreds of companies that are working with ESG, and that creates a very opaque, a very non-transparent market, and it is very difficult now to discern. But that is going to change from next year onwards because the ESME, which is a regulator at European level, it seems to be willing to regulate that sector. Well, the next question that I was going to ask is how are we adapting to the difficulties that you encounter on a daily basis regarding regulation, the lack of commitment, corporate commitment, greenwashing, disparity in standards, and so on and so forth. There's a lot to take care of within this framework. So, Alberto, how did you approach that? Well, I think that Adolfo has given a very correct description of what the last few years have been for us. I think that there are certain problems that are difficult to solve right now, and I guess that they will improve in time. The first is that if you are operating in Europe, the regulation is very ambitious. It, as managing authorities, it impacts us on many different aspects. It was not always coordinated in the timing and in the content as well, and that creates problems because we have requirements for data that do not exist or that are estimates. And that, instead of providing a true image, what it does, it generates a problem of reliability of data. It is true that as new standards are approved, that will get diluted, and the corporate reporting will be very useful when it comes to standardizing and achieving that canon of reporting between or among investors. There are other variables if we get into climate change and if we get into ESG suppliers and so on. The correlation between those is very low, and that is going to be a problem because it is the underlying methodology that does not converge. And I believe that many of them are improving step by step. But another problem that we encounter from the point of view of the managing authorities is that regulators are changing and amending the standards along the way. We cannot complain because we as an institution have resources to face that, but we have had to shift our criteria for data collection and for many other purposes. So what we ask for is to really consolidate a regulatory sustainability framework so that we can have a more stable scenario for everyone. And for you? Well, on our part, this whole avalanche, this regulatory tsunami, as it was called a while ago, for us, the problem and the difficulty is that it should allow us to focus on what is important for us, what is material for the company. There's right now a debate even at social level where people are discussing that everything is sustainability. Everything has to do with sustainability, and that is a risk because we might come close to nothing being sustainability, and that border is very difficult to determine. And for us, it is important to have a materiality analysis, a very solid one, and focus on what is important for every company. So reporting should not be a whole collection of what the company does and to try to assess everything. No, for us it is the other way around. We want to know about the areas where we can focus to add value to society. And of course, for us, it is more important, and the environmental part is more important because that's where we have the strongest impact, and then commitments in the long term, decarbonization, and so on and so forth. But for us, it is important that this regulatory tsunami, as I said, that is coming. Just to give you an anecdotal piece of data, the other day they said that in the last 10 years we went from having 15 regulatory initiatives. In 2021 we have 500, so being able to anticipate those 500 initiatives is impossible. So for us it is important that the regulation allows us to focus on the continuity of our model. We've been working for 15 years with this sustainability model, so an important challenge is to revitalize it and to keep it alive. And then on the other hand, that the reporting should not be the end in itself. It should be the means to be able to improve yourself. It is not just a question of having lots of indicators and as homogeneous as possible, but to look at those that are important for you and to try to improve them. So it's more in doing, in the management of those indicators. But it is important, reporting is important, but we need to take action afterwards. Anais, and for you, team, well, the first problem and difficulty that we find is the definition itself of sustainability, because many of our customers or many of the investors all over Europe have a different definition of sustainability. In our case, we had to develop solutions where every investor can choose a set of criteria that correspond to their sustainability strategy, their ESG strategy, and that also allow them to define their own way forward, their own strategy. And that's what we see in the among our investors as a difficulty. The second difficulty is to fight greenwashing, because many companies are not like Enagas. They do not apply the same methodology in order to draft their report. And it is important to put every piece of data in perspective with the sector that they belong to. And also with the geolocation of the company, the geographical distribution of the company. So that work to provide consistent data is also a challenge, but that's what will allow us to fight greenwashing. And I think that the third, and it is not the last one, but it's the third solution to fight greenwashing is the development of expertise in ESG. And that was also a huge challenge, not only for us, but also for the whole sector. The human resources and the development of expert teams has also posed some challenges, and I think that will be solved step by step. And one of the recommendations that we make is that please do participate in initiatives regarding ESG. Please take part in events to learn about what is being done in the market. That's my recommendation. You said that you were had been working for 15 years in this sustainability topic. Can I answer? Oh, sorry. Yes, please go ahead. Our perspective, really. I think that this is a market that is quite new. It is moving very fast and changing, and regulations are quite complex and difficult to interpret. I can give you an example with the SFDR. We are speaking to many companies and many funds that were not sustainable, and now they want to become sustainable. From Article 8 to Article 9. And Article 8 says, I have metrics to try to be sustainable. And Article 9 is, I am investing only in companies related to this taxonomy. You see here that even among those experts that start with Article 9, they start to give interpretation of the regulation depending on the local application and the local circumstances, and then they shift to Article 8. So it's quite complex. And then regarding regulation or over-regulation, just a couple of comments. Like it or not, regulation is necessary. The absence of regulation does not work. But over-regulation, and there are lots of opinions, I don't have a clear opinion in that respect, but there are lots of opinions, but I could say that over-regulation is generating a lot of pushback, a lot of complaints. And the other day, even Macron and Belgium were saying that could put European companies at a disadvantage compared to other companies. And you realize that countries such as the US, I don't know if you are following DeSantis, that might be the next president of the United States. He doesn't want to hear about ESG. For him, ESG does not exist, and he has forbidden the funds in Florida to invest in ESG. So there might be, if there is over-regulation, that might create the opposite effect. And then another comment. Europe, in the end, and I was looking at the data last night, Europe generates 8% of the CO2 at worldwide level, and so it has to be a global effort. And all the regulators should go at least, if not at the same pace, at least more or less hand in hand. And then you can say that our experience as a rating agency, we are focused on MARF. And we see that companies, and when you look at the last issuances that there have been, they all want to look for sustainability, for the green approach. Some are ready, some are not. But they are all starting to realize that is a path forward, and they are all starting to move to generate internal sustainability frameworks and policies and so on. So I think that this is there's a lot of support and a lot of engagement on the part of the medium-sized enterprises. And then for a final comment about greenwashing, there are many interpretations here as well. I can give you an example. In the renewable sectors, all banks are funding the renewable sector because it is green and the taxonomy, and we have 30% of our portfolio in renewables. If you look at what should happen for those panels to work, you have a lot of lithium and mining and so on. And many people are saying mining, we don't want mining, we cannot fund mining, this is a red flag, and so on and so forth. And then renewables, everything is fantastic for them, even if they use lithium and everything. So we are also in scope 1, 2, and 3 in CO2 emissions. I think that the greenwashing will also incorporate all that to see whether it is greenwashing, because renewables could end up being greenwashing. We are sustainable, we prevent pollution, and so on and so forth. So they are complex concepts that have still a long way to go. Well, I wanted to ask you, in the case of Enagas, where does it come from, this sustainable financing? Where did you get the idea from? Well, for us, I think we've been working for 15 years. I think that drive, that will to make progress in that direction has always been bottom-up and top-down. And it's cross-sectional to the organization. When we define our management model, we always say that we should be characterized by integration. Integration from a strategic point of view. In the last 3 strategic plans, sustainability has always been one of the pillars that was included in that plan, and as such, it is also related to the variable compensation of every employee. So since 2010, we have variable compensation associated to sustainability for every employee with 20% relevance. It becomes so mandatory, and everyone has incorporated that in their DNA. Of course, some to more extent than others, but it is important at operational level. For us, that integration means that we have sustainability as a lever for improvement. What I was saying before, we take assessments from different indexes, Dow Jones and different rating agencies, and we look at that annual assessments and the proxy advisors and that engagement that we were discussing before, and we want to identify our assessment vis-a-vis last year and how to improve it. For us, that assessment is very important on the part of the different agencies and the investors. It is very important for improvement. Criticality is becoming higher. When we were talking about the naming convention, naming convention, we are always saying whether it is corporate social responsibility, sustainability, ESG. Now ESG is becoming more trendy, and that comes from the financial sector and the investor world. So sustainable investment or financial sustainability, which is almost the same, for us is key, of course. In the last few years, initiatives and the push from those types of areas is huge, and the taxonomy and the adaptation and the reporting of CAPEX and OPEX associated to every project in the taxonomy has been also a key element, and we are embarked right now on one of the other royal decrees that are coming, which is about analyzing the impact of climate in terms of climate change, of those financial risks. That is going to be key and a breakthrough in the coming years, and then that compensation. We have our loans are linked to sustainability indicators, to the material ones, to the decarbonization ones, the important ones. So we have just renewed the associated loans. So the engagement and the commitment, of course, is key. And our sustainability committee and finance, the chief financial officer is a key element within the block, and we have promoted the creation of a new energy management, and we will continue pushing forward. So not only in gas, but also we want to communicate it to society. And so from my side, what is the key of the success of sustainable products, and what are the difficulties that you are encountering in the sector? How are you managing that?
Retos. Uno es la definición de su estrategia.
One is, there are two secrets. One is the definition of the strategy, and in order to do that, you have to be quite authentic in your approach. And two, transparency. You have to be transparent and helpful. And here I would like to speak a little bit more about investors, about small and medium-sized investors. And this is a recommendation for success. You have to make progress step by step, little by little, and to first define your strategy and before you answer the regulatory requirements, and to make progress step by step by introducing the concept of ESG risk, and that will continue to add value to your investment portfolio. And then when we make progress in the ESG day in terms of the maturity, and we become more mature in ESG, we need to have an impactful disclosure and action, and I think that the European regulations help a lot in that respect.
I think that European regulations help the European landscape a lot, but we need to be honest in their approach, and I insist on this a lot because it's a message that I want to get across. It needs to be honest, we need to report, but we need to work very clearly with transparent, reliable data. That is the key. We also need to be honest nowadays. We have progressed a lot, I believe. I mean, I know a bit more about southern European countries, Portugal, Spain, France, Italy. These countries have grown a lot precisely thanks to regulations compared to Nordic countries. But we need to be honest. According to the Davos report, less than 1% of global funds are impact funds. So let's be honest about this. There are not that many impact funds. We need to gradually increase this. In line with Anaïs's remarks, there's something that is very significant. We were talking about regulations before as a problem because regulations are so strict and demanding that sometimes they can become an obstacle. But we need to think about what our future will be like. They help predict to a high degree what will happen. Our regulation in terms of dissemination, like Alonso was saying, is already it's already letting us know if funds are Article 9 or Article 8 compliant, if they're sustainable, not sustainable. In this regard, material information, adverse events, KPIs, things that companies will have to report. In many cases, we're talking many cases so far, there are estimations, but from the point of view of institutional and retail investors, the options on the table are way broader, way richer. This is always better. The execution today might be a little bit confusing, but we're moving forward, as Anaïs was saying. Impact funds today are very few. In the European Union, approximately, in the UCITS world, 50% of the volume is in Article 8 funds. They don't have an explicit sustainability target, and 1-2% are Article 9 compliant. We're talking about investments that are purely sustainable. From the investor's angle, or at least in our perspective, it puts on the table a very important point of view that Jose Miguel was mentioning too. It's a transition. OPEX, CAPEX, the world is not divided in evil, good, and black and white. Many companies, many activities are in a transition process. And what we are looking for, among other things, is not only to give our clients appealing products, it's to use information to appropriately identify all of these transformations of business models. It's not only a target in itself, it's more a working tool, as you were saying. And from this product side, it's wonderful for the investors, our investors teams. It's also a win-win situation. They have more information to make better decisions. Just to briefly mention what Alfonso was saying, ESG analysis is moving a step forward. So far, we had ratings, direct impact, forecasts, climate forecasts, analysis of value chains, supply chains, as an assessment to know whether we are actually doing things well, having an impact, or maybe barking up the wrong tree. What we have is a structure with a high potential for analysis, for investment, and on the other hand, for the execution of products, but the potential of growth is enormous. Definitely. That's why it's so important to look at the external assessment role. Adolfo, how is Ethifinance ratings different to others? How do you adapt to an ever-changing environment? Can you help us? What is the challenge for the next years? As an external assessor, what we do is we are independent to the companies we assess. We are independent. We're an expert These are the main pillars. And at the end of the day, this is important because when someone issues a sustainable bond, a green bond with KPIs, it's important that this assessor challenges the company. It's not about doing the same thing over and over again. KPIs started that way. It wasn't a big challenge to meet the KPIs before. Oh yes, let's do what I was already planning to do, but let's include this as a KPI, and that way I can call myself sustainable. You need a discipline tool that is challenging, demanding for companies to meet in terms of the difference between Ethifinance and other competitors. In the ESG market, we are seeing differences. Some specialize in consulting services, some in data management. We have been in the market for 20 years. We were based in France. We cover all listed European companies, but we focus, yes, on Europe and specifically mid-cap focused. We need a more proactive approach to get involved with the companies, really, to generate data, to help them in their transition to a more sustainable future. And we see purely ESG companies. For them, we've got an ESG business, a rating business, but we combine these two business lines. In corporate ESG ratings, we have in corporate ratings, we incorporate ESG KPIs. The rating can go up, down, depending on the sector and depending on what the company is doing. For instance, if it's a red, so to speak, sector in our risks map, what is the company doing to mitigate such risk? This is a very important topic, and in the future, I believe that in the same way as when you see a company, you analyze, well, their board of directors, if there are independent board members, the structure, the command chain. I think that ESG matters will be part of the analysis of the company, a factor that will be thoroughly analyzed, because clearly what we've seen is that before ESG, I mean, it was great to be mildly sustainable, but today it's measurable. There are metrics for risk. If you are, as a company, wanting to increase your options to survive in the long term, you have to be sustainable and facing future challenges. Let's not focus only on green companies. Focus on brown companies. That's where you can do the most. A steel company, a concrete company, if you don't finance them because they are brown companies, as we call them, that's no good. We need to be inclusive, help all sectors in this transition, and with the consolidation of the market, let's reduce the amount of different opinions. No, you need assessors, evaluators to establish a clear conclusion. Like maybe you can have 4 or 5 external consultants to reach a common ground. Yes, I wanted to highlight how relevant it is to receive external evaluations, assessments. It's an input for our yearly plan, which is updated yearly with indexes, with figures. These assessments are key for us in our communications. Our yearly report and engagement with you, that's our way to do it. Yes, we are making a huge effort to improve the standardization of reports, and it would be very positive, in line with what Adolfo was saying in his last remark, to progress in everything that can be standardized. The demand for information by external consultants, assessment agencies, not only to simplify the efforts of companies, but to be able to compare, to establish benchmarks. I totally agree with with you, Adolfo, in the transition towards sustainability. In our case, we need to encourage new business models and to reduce and adapt others. This implies global investments with very cross-sectional schemes and to shed light on these issues and pressure for a more standardized ESG reporting framework. Just to conclude, I wanted to mention the effort you've made in your companies. When it comes to resources to tackle sustainability, sustainability takes a lot of resources. Because we are in the Medcap forum, just to conclude, help us understand the advantages of allocating these many resources. Convince us, what are the benefits of allocating more resources towards tackling the sustainability issue for middle and small size companies? Let's start with you, Adolfo. Here, I'd say that it's not only about middle and big size companies, it concerns SMEs too. What we are seeing, even when we look at companies like yours or significant sized companies with banks, the tenders ask for sustainability metrics. If you have implemented policies, not only in terms of the environment, but social policies, etc., governance policies for companies, they might have 5 years to make this transition. If you don't, it will be the dead of them, like compared to their peers. So it's key that they do this. We work with debt funds targeting companies with 20, 30 millions of turnover, and these funds need to be Article 8 compliant, because if not, nobody will give them money. So they are forcing these companies to provide the information they ask for, or any kind of information, and to commit to improvement, because these funds, they don't need to be purely perfectly ESG, but there needs to be a reporting that in 5 years, look how far they've come thanks to the management and the involvement of our bank or our agency. You can't wait any longer. Miguel? Jose Miguel, you've been doing it for a bit longer. In terms of allocation of resources, I'd like to spread the word to reassure you. It's important to allocate resources for sustainability, but are we talking about exclusive resources, or maybe people who are doing several things at the same time? We're not talking about exclusively sustainable focused resources. Yes, you can allocate the staff working on sustainability and other issues. That's important to remind you of. And there's a debate in the same line. The debate when it comes to resources, people say sustainability is so well integrated at home, so I really don't need to allocate specific resources. Everything is sustainability. When you want everyone to be 100% sustainable, the risk is that no one is sustainable. If you are coordinating, if you're managing, you should remember this. Don't fear hiring members of staff. If you're thinking about it, the sooner the better. I was talking to Alberto Andreu the other day. He's the chair for the DIRSE sustainability directives, and he gave a very interesting figure. They've been in the business for 10 years. 10 years ago, in the labor pool that they manage, they had maybe 1-2 vacancies related to sustainability per week. Right now, in their job pool, they are managing around 70 vacancies for positions of this kind per week, 2,500 last week. It's non-profit financial role. It's a more technical profile that people are looking for. This role requires more training, more specialization, but it requires being cross-sectional cooperation. It's important that people in investment relationship with investors. It's important that they know about sustainability and that these also participate with investors in our roadshows. I mean, there's a bigger integration between sustainability and investors. Don't fear the return of the investment because it will be high. What about you? Yes, we're the evil ones in the chain. I should be wary of what I'm saying. I would like to go back to my initial remark. The market has changed. It's very different to think about what was happening 5 years ago, and now it's hard to find an investor, regardless of the scale. You gave a very representative example. They're going to ask for sustainability KPIs when creating their portfolios, regardless of whether they are sustainable or not. We will need these KPIs. So the first reflection is this is not optional. It's compulsory. We are in a different reality. Organizations have to adapt to be at the forefront. But let's move back to the more constructive angle. Our management sustainability approach is incorporating more information because it's always useful to make investment decisions. The more ESG data we have, material information in some cases, this is all positive. Investors are asking for it. There are regulations that are very demanding, backing this movement. And from the point of view of the stock pickers and creation of portfolios, KPIs are necessary and they will provide a lot of value when making decisions. So yes, it is extremely relevant. I also want to agree with Jose Miguel. It's so hard today to find profiles that are versatile enough, so to speak, because if you think about, with the exception of specific topics like climate, etc., you need people who are willing to integrate with clients, with investor relationships, you need very interesting profiles, and communication with the end investors needs to be developed, moving from a standard that we are all used to a much more intense one. I think it's an opportunity and I would perceive it this way. Anais, this is your chance. I agree with the companies and that it's even harder for small and mid-sized companies. I fully agree with you, with your remark, Adolfo, about the future need for a transition. Of course, it's an opportunity, as you were saying, because we need to be honest. We will have more and more regulations in the future. The challenge involves large companies, but it's much larger for the small and mid-sized ones. Their success, their appeal depends on their reporting capabilities, their governance too, their ESG management. I firmly believe this, and I also hope that investors will be not indulgent, but to support the companies in their transition process. I believe that that is the secret, the key for a better world. Socially speaking, and in terms of the environment, it is key. I agree that human resources and development of expertise will be crucial and a huge challenge for the upcoming years. I believe that there is a favorable prospect for these profiles. I hope it will attract talent to participate in a more eco-friendly future. We don't know, but we don't know for sure, but our children might work in sustainability. I was hoping for a bit of time for the Q&A, but we've run out of time, so I would just like to thank you for listening. We are more than happy to answer any of your questions in the coffee break if you've got any. Thank you very much.